Welcome to Mark Arnold's Finance. Today I want to talk about two popular companies amongst investors, and that's Home Depot and Costco. They both recently reported earnings, so I want to talk about my investment thesis and analysis on these companies, and I'm in a little bit of a dilemma I'd like to hear some feedback on, which I'll share at the very end of this video. So we're going to cover these two companies in depth, but I first want to show you my portfolio performance. Today, it was announced that inflation is finally on a downtrend and it actually came in lower than estimates. So it's creating a really positive day in the market. We'll see here I'm down 2.15%. That's a little over $1,000 of unrealized losses. But this is my portfolio. These are real holdings, real investments. I want to be about transparency and honesty on this channel. So if you like that type of content and appreciate it, be sure to subscribe. I put out content pretty regularly, so there's always something I feel you can take from this channel and learn, and we are all learning together. But yes, you'll see here a green day, and it's really helping my portfolio. Last video, I think I was down about 2,000 bucks. So let's dive into this video. I recently put a poll out there on my channel, and I asked, if you had to choose one stock to buy now for a long-term hold, would it be Home Depot or Costco? Now, I'm not a huge channel, so I got 10 votes, so thank you to those who participated. But I think this would reflect whether I had 100 or 1,000 votes. We'll see here Costco took up 80% of the votes and Home Depot 20%. So as I go through this video, I'm going to be keeping this in mind, and at the end I'll tell you if I agree with this or not. So let's start with Home Depot. Home Depot, we will see that their stock chart, if we look at the last year, they are down 19%. Now today, due to the stock market, I think they got up into the high 330s. Regardless, over the last year, they've been in the red. Now, as far as their earnings, their recent earnings, we will see here that they did really well. They came in at $4.24 for the earnings per share number versus the expected $4.12. So that was a big beat. And their revenue is a beat as well. They came in at $38.87 billion versus an expected $37.96 billion. This was very positive for Home Depot. I also want to point out that Home Depot said Tuesday that while its customer transactions were down slightly more than 4%, its average ticket prices rose about 9% to $89.67. The company also said its sales per retail square foot rose 5%. So though there's less customer transactions, the amount that customers are buying is up 9%, so it's netting it in the positive. So this was a really good thing for Home Depot. Now, if we look at the fund analysis of Home Depot, this is measurement by analysts on these kind of valuation, quality, growth, stability, and financial health metrics. And so valuation-wise, they deem this company very overvalued. And I do agree with this, and I'll explain why at the end of talking about Home Depot. Their quality is extremely high, their growth stability is in the middle, and their financial health is low. Now, at the end of me going over Home Depot and Costco, I'm going to call it world famous metrics chart, because I know there's some of you that have joined this channel from other countries. So thank you and welcome. That's pretty neat. But the metrics chart is really measurements that I deem most important to look at before you invest or during your invested time with a company. It's very good to track these. So that's what I'll go over at the very end of the video to compare the two companies. But first, we'll look at a financial snapshot, just a higher overview. And we'll see here that Home Depot's liability to assets, that says debt to assets, but it's really liabilities to asset percentage, is 98.3%. This is extremely high, and I do not like to see this. Now, their profit margins are healthy at 34%, and their cash flow is very good this last quarter of earnings, and it came in positive for their net cash flow. But it's that liability to assets that is just, it really is a sore sight to see for me. I do not like companies that are highly leveraged, so we will be looking at more of their debt numbers a little later. And so Home Depot, what I will say about this company is I've said this for a long time now through many videos, but a lot of people had worry that when the housing bubble pops, when home purchases go down, that Home Depot will suffer. And I was on the opposite end of that spectrum, saying that I think Home Depot will actually continue to do very well, because after the pandemic, we had 2 years of intense home buying. We saw houses selling like hotcakes. And so those 2 years of those home buyers purchasing and taking up all these homes in the market, what do you think they're going to do over the next 5+ years? They're going to renovate and upgrade those properties. I've owned my home for about a decade now, and I can tell you I'm still renovating and updating my home, but more so in the first 5 years. And so that's what I think is good with Home Depot is that, yes, rates are raising, but that's going to keep people in their houses right now, which means they're probably going to choose to renovate and upgrade instead of buy a home. So I don't think that's going to hurt it. Home Depot to me has a win-win cycle here. So when home purchases are up on the uptrend, you're going to see an increase in contractor spend and renovation spend, right? They're getting those houses ready to sell. When home purchases go down, you're going to see an increase in that DIY work and that contractor work in renovating and updating homes, because people, if they choose not to buy, they're most likely going to choose to do something to their home to upgrade it and get it ready maybe for a future sell years down the road. But regardless, whether home purchases are going up or down, I think Home Depot wins because people will be updating and renovating their homes for one reason or another, whether it's to sell or to keep. And so I think the only thing that could hurt Home Depot is a very harsh recession where people put off those renovations and upgrades for another year or two. So we could see a couple hard years with Home Depot if we have a deep recession. But if we don't, I think people will continue to upgrade and update their homes. And so, yes, I think that's a win-win cycle for Home Depot. But again, I do not like the high liability and the high debt that we'll see on the metrics chart. So Home Depot is a quality company. It's just that high liability and debt that I don't like, that we'll look at more. And I also think that the strength of this company is that it's a win-win no matter if home sales are going up or down, because people will always want to upgrade and remodel their home. So now let's talk about Costco. Let's look at their stock chart. We'll see here that they are down about 12.5% over a 1-year chart. And if we look at their earnings, their recent earnings weren't as strong as Home Depot's. We'll see here that their actual revenue came in at $54.44 billion. They were expecting $54.78 billion. And their actual EPS came in at 307. They were expecting 310. So Costco had slight misses on both their revenue and EPS. I also want to show what they released were their sales per part of the world, per part of where they do business. So in other words, in the US for the quarter, sales increased 9.3%. That's a very impressive increase, a healthy one. In Canada, it was a slight increase at 2.4%, and other international was down 3.1%. The reason why I'm showing this is because a lot of bullish theses on Costco is that their international growth should be strong. But it's been proven so far that internationally, Costco is not as popular as here in the US and Canada. So I think that's something you have to keep in mind, and these numbers are proving that. So if you're bullish on their international expansion, I don't think you should expect it to be as strong as it is here in the US, as popular. Now their e-commerce went down 3.7%. I do not like to see this because e-commerce, I think, is a huge opportunity, and Amazon, of course, is the best example of this. They dominate in this area. Home Depot actually does really good in the e-commerce. I don't have the numbers right now, but they have a good app. I've used it. Costco, their app needs some improvement. I've used their app. It's clunky. I don't think it's that easy to navigate around. So I think Costco needs to focus on their e-commerce side of things. So just to look at the store count here, we'll see that currently they operate 847 warehouses, 583 in the US and in Puerto Rico, and 107 in Canada. Then the international, they consider 40 in Mexico, 31 in Japan, 29 in United Kingdom, 18 in Korea, 14 in Taiwan, 14 in Australia, 4 in Spain, and 2 each in France and China. Of course, China is the one that all the eyes are on because it's a huge economy, and they only have 2 stores right now, and so far they've been very popular. So if Costco can be successful in China, of course we have their government that's not reliable, and you never know what they're going to do. But regardless, if they can get in that market and saturate and have good relations, I think it will prove to be very strong. But again, so far, we're not seeing strong numbers from international stores. Now, with their fund analysis, we will see Costco does a lot better than Home Depot. They're considered slightly undervalued, which is rare. They're of high quality, of high growth stability, and that financial health is towards the high end as well. So if we look at Costco's financial snapshot, we will see their liability to assets is a lot better than Home Depot's, but still a little too high for my liking. It's at 67.5%. I'd like to see this trend more towards the 50% range. Their profit margins are low at 12.25. But this is a good thing, not a bad thing, because Costco touts itself on saving its customers money. And so what it's doing here is it's taking a hit on the profit margin to make sure they keep the customers happy with their low prices. And so they're putting their money where their mouth is, and that's a good thing. Now, cash flow, for some reason on their latest earnings report, they didn't put out cash flow data, so that's gonna, that's to be seen, and I can post that when I do get those numbers. But overall, with Costco, my analysis on this company, my thesis is it is a high quality company. And I think Costco, where they have room to grow, is hiking their prices of their products and membership fees. So it's been years since they raised their membership fees, but I look at their membership as a sticky subscription service, just like with Apple or Microsoft. It's something that people are fine buying because they like the product. And many people that go to Costco, I feel, are very happy and addicted to shopping at that store. I know I look forward to shopping at Costco. It's just fun to look at all the different products and see what they have. You find some unique things sometimes and some gems, and overall you are saving a lot of money. And so Costco, you also got to keep in mind, they usually bring in the higher income customers because of that membership fee. I think that is a barrier to low income households where they rather go shop at Walmart or through Amazon or maybe the dollar stores because you don't have that initial cost. So Costco does tend to have the higher income households, which also will help it retain customers should it increase its membership fees. Now, during these hard economic times, of course, value customers will go to the Costcos, the Amazon, the Walmart. So it's a very defensive stock and should do fine during any type of recession that may happen. Now, Costco's biggest competitor, doing research, is considered Amazon. But I do think they're two different businesses, and people subscribe to each one or buy memberships for different reasons. Now, Amazon, I do think, is a slightly better value because you have the retail side of it, but also you get Amazon Prime Video, so the entertainment side of it as well. But Costco, I think people get Costco for bulk buying, bulk purchases of items. And so there's room for people to hold both. I know a lot of people that have both and they don't compare them, right? You think of streaming, you have Netflix, Disney Plus, HBO Max. People will cut for the other because they deem them all very similar. But Costco and Amazon, I think, are so different. People don't compare it in that way, and they're not looking to cut one or the other. They're just looking to have both. And so with that said, yes, there's competition with Amazon, but I don't think it's a problem. I think they're different enough where people will just have both memberships and it won't be seen as a competition when it comes to people paying for those two separate services. So let's get into my world famous metrics chart, and we'll see here Home Depot's in the first column, Costco's in the far right column. And with the PE ratios, what I like to see is their trailing 12 months PE ratio be below the 5-year average, and Home Depot hits that, where Costco, it's the opposite. So Costco is pricey, but it is considered a higher quality company, and I do deem it that as well. And Home Depot, I think it's still too expensive, even though it's below its 5-year PE average, because of that high debt and high liability number that we will look more into. Now, earnings per share, we will see that trailing 12 months, Costco does better, but over the last 5 years, Home Depot's done better, so it's kind of a wash. And with revenue, Costco does better both in the trailing 12 months and the last 5 years. And the reason why is because they have that membership, that dependable revenue, income, profit, because people, it's a sticky product. People pay for that and they don't think of canceling it, right? Because Costco is a good benefit for paying for that membership. So it shows in the numbers here. That's what I believe that really reflects. Now the cash flow, Costco, I mentioned they didn't really provide that. I even looked at their own company's release of their financials. I couldn't find any cash flow data. But Home Depot has shrunk 25.14% over the trailing 12 months. Over the past 5 years, they're relatively the same. Costco or Home Depot's done a little bit better at 14.47% versus Costco's 13.85%. When it comes to the dividend, Home Depot, I believe, is the better dividend play. They pay a higher yield at 2.37% versus Costco's 0.75%. But Costco does pay special dividends every few years. That makes up almost for that 2.37% Home Depot pays. I think last time it was $10 per share. So pretty healthy, and it's a nice gift or surprise when it does happen. Now, over the past year, they both have grown their dividend very healthy. Home Depot at 15.15% and Costco at 13.92%. I deem these very, very good and very impressive. Now the payout ratios, Home Depot's higher at a 46%, but anything below 50% I deem very safe, and Costco's at a very safe 27%. Of course, the debt with these two companies, Costco's overall is low. I couldn't get the numbers, it hasn't updated, but Home Depot, we'll see here, is really high to 63.49, and the liability to assets is at 98%. This is going to hurt this company's future growth, in my opinion, so that's something to consider. Now, gross margin-wise, we'll see here that Home Depot's is at 33.51. That's pretty healthy. Costco's is lower in that 12% range, but I explained why that's a good thing for Costco. They're proving that they are saving customers money and taking the hit themselves, which is actually going to help this company grow, believe it or not. Not many companies can do that. Return on equity. You'll notice Home Depot's is very negative at negative 3,656%. Costco's is good at a 28.88%. So if we look up the definition of return on equity, we'll see here it says it's calculated as income divided by average shareholder equity, and the income number is listed on a company's income statement, shareholders' equity, which is the difference between total assets and total liabilities. And so there we have it. We'll see that because they have such high liabilities, that's throwing this number out of whack and really high into the negative. So if we move on, we'll see they're both reducing their shares outstanding, which is adding benefits to us. They're not diluting us. They're adding more value to our shares. And the market cap's Home Depot's a lot bigger at $334 billion versus Costco's $216 billion. So overall, if we look back at the poll that we took, we'll see 80% for Costco, 20% for Home Depot. I will say I agree with this. I think this was right on the mark of where I would come in. And if I held these two companies, I would put 80% of my money in Costco and 20% in Home Depot. And so overall, yes, Costco is the higher quality company of the two, but Home Depot is still a great investment. And I deem them both Amazon proof. As I explained, I don't think Amazon is really a competitor to Costco. I think they are two different things. Now, my dilemma is I was wanting to sell Home Depot and put that money towards Costco, but I'm kind of in this pickle because I think Home Depot is still a quality company, long-term will do well, but that high debt, I just think it's gonna stunt its growth, and during hard economic times, this company's not gonna be able to pivot and maneuver like a company with that is low leveraged. So Costco is expensive. That's the hard part as well. My buying price would be $450 or below. It's in the $480 range. So I think what I might do is just keep my Home Depot shares. If it goes back into the red, I will just slowly add. If Costco goes down below $450, then I will just start adding with whatever funds I have. But you never know, I might get a wild hair and just sell out of Home Depot and put it in Costco should Home Depot stay high and Costco see a decent dip. But I'd like to hear your opinion and feedback on that. What would you do if you were in my situation? Also, what did you think of this video? Do you prefer Home Depot or Costco, and why? And do you agree with that poll? 80% of people prefer Costco and 20% prefer Home Depot. So these are two good companies. I definitely would like to hold both, but again, I'd like to be heavier in Costco. I'd like to get into Costco. It's just so expensive, in my opinion, valuation-wise. I'd like to see it still come down more. But long term, I also got to think it's probably fine if I buy in now compared to $450 or below. So I got a lot of thinking to do, but I'd love to hear your feedback. Be sure to subscribe. Thank you guys for joining me today. I hope you have a great day, and we'll see you next time on Mark Arnold's Finance.